damn phones. Babylons can't crack the code.
Back at it again. It is Q&A Wednesday. Basically what that is I will look on Facebook, trading group, and look at someone's question or comment and just kind of give you my take on it, my thoughts, how I feel about the matter. With that said though, I'm gonna give you a quick rundown on how I ended the day. You can see at market close I was up $228, a little over 8.5%. And as the account grows, then the dollar value per percent, if that makes sense to you, say if it was $1,000 account and I gained 2%, that would be 20 bucks. If it was $2,000 account and I gained 2%, that would be 40 bucks. If it's a $2,500 account and I get 2%, that would be $50. So with that said, that's why I ended. But then in after hours, and this has gotten me questioning what I want to do with this stock. I noticed this big, it wasn't a big drop, but still, lost about 50 bucks in after hours. So I technically ended the actual day after hours, everything said and done, with around $180 profit, or up in the green. And then as we can see for the week, I'm up for the week, $320.56, close to 13%, a little shy of 13%. Now, would have been closer to 15% if I would have held this. Now what happened was in after hours, and I was seeing this huge drop, I had to look at the news. I had to figure out what was going on. It's not natural just for it to just tank like this, so there had to be some type of news that came out. And basically I lost about $40 of profit in this one trade, because they decided that they were gonna do a 10 million share secondary offering that I believe Goldman and JP Morgan are taking the cue on. And I've seen about offerings before and read about them. I don't really and sometimes they can have a positive effect or they can have a negative. It depends on how the market sees it. If they're trying to raise capital because their company is expanding and they need to keep up, it could be a good thing. But with that said, I'm debating on just going ahead and putting in a stop loss, and then I'll get up for pre-market, which at 8 o'clock I'll be able to execute trades on Robinhood. So I'm off, and they offer me the ability to trade 30 minutes before market open. And so, but by then, to be honest, it could be too late. Now this is Central Standard Time, so 3 o'clock. So the market opens here at 8:30 a.m. It closes at 3 o'clock p.m. Then the latest I can trade in Robinhood is 2 hours after market close, so at 5 p.m. Then my screen goes black. I have no access locked in until tomorrow at 8 a.m. when I can trade in pre-market at 8 a.m. 30 minutes before the market opens. And then if you notice at 8 p.m. I think that's when the market's shut off completely. It's not available to anybody, any other country or anything. And then at 3 a.m., which I'm up, finishing up here a lot of times, trying to get to bed soon because I gotta be up in just a few hours for market open. And what you'll see is you'll start to see prices move because somewhere else in the country, or maybe even here, I'm not sure, but trading is going on somewhere in the market, and so you'll see the prices start to change. But keep in mind, I still won't have access to the market until 8 a.m. 30 minutes before market open. That my screen will go white and I can start executing trades. And so I'll think about putting in a stop loss, because this wasn't intended to be a longer term trade. I still see that it has, and I'm going to wrap this up so we can get on the Q&A Wednesday. We'll pull this up real quick. There's so much news to talk about today, but so we can see here that it just had this major drop back, and now it's down here, and I'm curious to see what it's going to do. To me, I'm thinking worst case scenario, I'll put a stop loss at break even, and if it hits it, I didn't lose any money. I had that money tied up for a bit. Things didn't pan out, no biggie, because I'm looking at other things that I believe are undervalued right now, and oil is possibly one of them. Now, oil can be slow moving though, so I don't know if I really want to get into that trade just yet, or if I want to look at other stocks and look for a better setup. There's something else that I believe is undervalued, or still undervalued. The SPY, we had a very big boom. I talked about that today. I didn't think we were going to break through this quick. I was just looking to get through this right here, this price area, and then I figured the next point of resistance would be the 180-day EMA. You can see here that it did hit it and pulled back, and then in the second half of the trading day, it just pushed right through it, no problem. And now we're above the 180-day EMA. I would like to see it hold up above it, but basically the news came out that Colin Powell, Federal Reserve Chairman, talked about, as far as more rate hikes that were basically there, were in neutral territory, and that basically the impression I think he gave the market was that he doesn't see any interest rate hikes anytime soon, that we're basically there to where they want to be for right now. And so that's why you see that this big jump in the market. People are still talking about GM. I'm telling you, do your homework. I wouldn't be so quick to start shorting it or putting in puts, because basically they're restructuring. They're in a totally different boat than Ford. Ford might be a good company. I haven't done a whole lot of due diligence on it. Ford might be, though, a good short opportunity, but GM, they put out information, and they're in a totally different setup, as far as they're not in the same situation as GM is, as far as finances and how they've performed the past few years, and profitability and whatnot. So just keep that in mind. Now, moving on to Q&A Wednesday. This question, I'm gonna keep it anonymous, but it says, hey all, I won't have access to Robinhood for about 3 weeks, so I want to buy a couple of stocks for my money to sit in for those 3 weeks. Where would you put it? ? Stop limits ? For me, in all honesty, unless you are familiar, I don't know how much money it is, but regardless, it's money that you spent working to accumulate to get, and so you traded your time and labor in order to receive it. And so whether it's $5 or $5,000, I would still look at it from the perspective that wasn't just easy money, and so you try to get your best value for it, if that makes any sense to you. So basically what I'm trying to get to is, for me personally, if I wasn't having access to the market for 3 weeks at all, I wouldn't know what's going on or anything, then I would stay out of the market. And that's really what it comes down to. As much as you don't want to and you want to stay in the market while you're gone, unless you know how to hedge and you got a lot of experience and you've done this is your profession, you professionally do this, then I would just stay out of the market, because basically at that point you're gambling. For all you put on that trade, you put a stop limit on, and freaking five minutes after you leave the house, it hits that stop limit and you're out anyways. It's basically, whether you put stop limit or not, it's still a gamble. I won't see why it would be. Now, don't get me wrong. Now, it depends on your strategy as well. if you're trading something similar to the way I'm trading, then you might be able to get away with it. I still wouldn't recommend it. If you can't keep close to the market and know what's going on, I don't see the value of having money in it. Unless you're a long-term investor and this is your 401k we're talking about, which I assume it's not, then I would just stay out. I don't see why you'd want to do that. And this also brings up another good thing for Q&A Wednesday, because we got 12 comments on this this posting. So here goes the 12 comments, and that's some more news that's coming up. I've talked about it in a previous video about the G20 summit coming up this Friday. And this person says, risky with G20 coming up, not having access to your funds. If it were me, I may gamble on Apple. It's fallen pretty heavily and could see a decent leg up. That or GM puts possibly. GM, I don't know why everybody's so quick to sell GM off. Yeah, they came out with news they're shutting down 5 plants, but you got to look at the bigger picture. I'm telling you, I think a lot you'll see here in the next few days or weeks, a lot of people talking about, I lost this much on this stupid trade, because everybody was saying do it, that it was going down, and so I went with the crowd. Keep in mind, 90% of people that are trading are not successful, so I don't know why I would go with the fucking crowd if the majority of the crowd's the ones losing money. I try to come up with my own game plan and my own way of managing whatever trade I decide, and how I'm going to manage the risk in it, and then once I have that game plan, then apply it, put it into action. So, and then also he says, I think MJ stock could have a good December also. So basically, I think his first sentence said enough right there. With G20 coming up, not having access to your funds. So why would you? Is it that important? I mean, to me, it'd be more important to conserve my capital than to risk it, because basically that's your tool to making more money. And if you're risking losing your tools, then how are you going to make more money? How are you going to work if you don't have any capital to trade with? And I think people tend to look at money the wrong way when it comes to trading, is that this is capital and you have to protect it. These are tools. Just like a carpenter would have saws and hammers and straight edges and just all these different tools. He has a toolbox to lock them up at. When he gets on the work site and he leaves and he goes to eat lunch, he puts them in his toolbox in his truck and he locks them up for a reason, because those are his money makers. That's his capital. That's what he needs to make more money. And same thing with trading stocks. You need to protect your money. Those are your tools to making more money. Is kind of contradicting, I guess you could say. That might be the wrong word. Money, using money to make more money, but basically that's what it is. It's your tools as a trader, and if you don't have any capital, then how are you going to make money? So moving on. This person put just waiting for a M-A comment. We'll just move on. This person says, I think XXII is about to hit the sky. That is another marijuana stock. Now, me personally, just from the little bits of info I've gotten off of it, I'd kind of correlate it or put it in the same boat as IGC, which is now IGCC, which is basically not a legit company or stock to really trade. And so XXI, it's another penny stock, and you're just rolling the dice and hoping it lands on your number, Then we get some other people with just some suggestions. MSFT, PEP, J&J, Johnson, that's good. PEP, I think that's so we got Microsoft, PEP, I think PEP Boys, Johnson, I'm not sure what V and CNC, what stocks those are, but those sound like decent stocks. But once again, unless, even then, for me, when I'm accumulating positions, I'm not buying it all in one day, but I'm also, and I think some of these I did accumulate over the course of like 2 to 3 weeks. Because earlier this week I was still buying positions in some of the stocks I had, and basically because I knew, and I talked about it in my trading plan earlier this week, and pretty much throughout that, when we were down here on the SPY, if we broke through this point right here, now we went down below it a little bit, I wouldn't have bailed out, but most definitely once we got past, I'd say around the 261, then it'd be time to start taking off some shares and possibly scaling out pretty quickly and trying to control my losses, trying to manage them, and just waiting, and sometimes that's what you have to do. You just have to stay out of the market. There's a good interview. I haven't got to watch it all, but I do plan on it. Just was a busy night at work. Let me see, pull it up really quick. Coming up on 16 minutes. This video is gone for so far, and history. It is actually a speed trader did it, and it's an interview with the legendary day trader Steve. Who is this? Steve, I can't even pronounce his last name. Kalayjian, Kalayjian, and actually another person that I follow that, which they're a day trader. I still, I'm not one for day trading. Maybe once I get over 25, that I might incorporate some day trading into my strategy. But overall, this is what I found that works best for me. And we can see today, the majority of my trades, I'm now in the green. Up some not so much, but like that one I was up $50. Unfortunately, they decided that they were gonna do a secondary offering, and I believe I'm down a little bit in IQ. Yeah, just a little bit. And MU, I'm up just a little bit, but I'm up, and it's just starting its trend. Also, so that was MU. TQQ, I'm just barely up, I think, in this one. Yeah, just barely. But this has a lot more room to go. This would be a longer term hold. I'd love to pull it up and show y'all, and I might, if this doesn't take too much longer, have to make a mental note to go back. CGC, I'm down in quite a bit. This is a long-term trade / investment, as well as ACB. This one I'm down $70, not too bad. About 12%, 12.25%, and it's starting its uptrend. Apple, I'm down. It's making its comeback. My average cost is 192 even, because I've been keeping a close eye on it. I was looking at getting out of it earlier this week. I talked about it, I think, on Monday, about possibly getting out of it if it broke the 170 area once again, and it started to turn around, and so I'm down a little bit in that. This one, I'm only holding 3 shares. It's quite a bit of capital. It's making up 12% of my portfolio. Not bad. So we'll see how it plays out. I would say pretty much overall, to be honest, out of this I guess you call it bundle of stocks that I've accumulated, and since I started this stream and everything, that this is probably one of my worst trades so far is Apple. And basically, my entry was not good, and I should have waited. And so, I like to look back at my trades and see what I could have done better. And I should have held out longer. and waited for more of it to hit some more solid foundation stability, and which I thought it did, and it and previously it looked like it did that, and then and it started to show a reversal, and then it dropped again, and so hindsight's 2020. The only thing good that I've done so far in this was taking such small share size that I was able to hold, and I didn't want to take too big of a loss on this, and that's why I was looking at getting out. It wasn't that I was down a whole lot or anything. It was the pattern of the 180-day, the 4-hour 180-day chart, and that it wasn't showing any points of support anytime soon. Once it broke past that 172 area, and that 170 probably might be a chance to hold. But if that's gone, it's gone. There's no telling when it's going to hit bottom, and I think it was needing some good fundamental news to come out in order to turn it around. But we're gonna go ahead and move on, because this is going to be a pretty long video, and I don't think people like watching long streams. This one I'm up, not a whole lot, but a little bit. And that's the deal though. I mean, think about it, if I'm up $50 in each of these trades, it adds up. And basically, I had little risk in these trades, and with potential. And like I was saying, like TQQ, I believe this one's going to be a big money maker. Talking a few hundred dollars off of this trade, and so we'll see how that plays out. The ACB, I think I'm down just a little bit, about 6.5%, and it's starting to trend up. I have 70 shares of that with an average of $6.31. And I accumulated just over time with this. I recently bought 10 shares at $5.35 earlier this week. And then it seemed like shortly after that is when it started to turn around. And so you can see just the different dates that I did accumulate. Okay, I bought 20 shares. Good for me. I bought 20 shares at $5.35. So, and you can see I didn't just go buying all in the same day. It was over the course of time that you can see. In some of these, I bought in quite a bit, but you see like 1 share, 2 shares, 1 share, 5 shares, 10 shares. But now, and this is where a lot of people go wrong. You think even right here, if I would have bought in all 70 shares on October 30th, you think if I would have I think this is when okay, so I started here. So you think if I bought all 70 shares on October 24th, that's when I started accumulating this position at 788, and I had all 70, and you can see it got down below 535. You think I've been able to hold all that? You think I've had enough willingness and tolerance and patience to hold with it being down that much from my initial entry? So that's why scaling in and having a point where you stop and say, that's it, I'm out. Having a plan before, and then so basically, as you see the different prices I got in and took, and some I didn't take that many shares at all, and then as it got down here, I started to pick up the share size again. Went in at 12, then 5, 3, 1, 1, 1, 2, 1, 5, 10, and 10, and now 20. So that's, ideal. I'm, as far as this trade right here, the entry and everything, and how I've scaled into it and accumulated, I think I did a great job on this one. And so we'll see in time how well it pays out. I believe it's going to pay out good. So moving on, IBM. I've been down on this one quite a bit for a while. It's just now back up to where, and I knew it was way undervalued, and I still believe it's way undervalued for what it's worth. I'm only holding 3 shares. Keep that in mind. But still, I mean, I believe that I can make easy $60 off of this trade, if not more. And that's just simply having this $368 sit there. And manage my risk and just let it basically do what it's going to do, which to me that was probably one of the better trades that I took, even though I'm only just up now a little bit overall. Nvidia, this one was a little bit scary trade because it had such a bad sell-off and nobody was buying, and that's partly why it just comes with time and experience, and I know it will not make sense to you, but I started buying because nobody was buying. It reached a point where no one else was selling though, but no one was buying either, and so I knew it was just a matter of time. It was a great company just because Bitcoin had crashed, and and there's talk about the mining and all that, and basically like it just was a fad, and then come and gone, but you see now that it's back up. Not just the stock, but Bitcoin as well has gained some value. This is making up 14% of my portfolio. I got 4 shares and I'm up almost 4.5%, $26, so it's not bad. So y'all get to see where I'm at with all my trades. And the SPY, this is what I've been talking about, is the 274. But we're gonna jump back to TQQ really quick. We're coming up on the 30-minute mark, so I'm gonna have to wrap it up. So we'll pull this up really quick, TQQ and why. So, just seeing how much it sold off, my average cost on TQQ was. Hopefully the picture is not lagging. I know the volume is great, but I got a laptop that I'm running 3 external monitors off of with a external mic and camera, and it keeps up pretty good. I mean, surprisingly, it's a newer laptop. It's not a Apple, it's a HP, but it wasn't a cheap one, I know that. But I am looking at building my own desktop computer so that we will not have this issue with the picture freezing up. So my average is 49.55, and so 49.55, and we're up just a little bit. And this one I'd scaled into. It was really surprising to see that it ended up breaking through this level, wasn't able to hold it, and so the next point I felt like resistance was going to be down here. And so if we zoom out, we can see why. And that's the thing that new traders, you got to look at the bigger picture, and that's what I'm trying to tell people about GM. And a lot of them aren't listening, and they're thinking, oh, you don't know what you're talking about. And I admit, I haven't been trading that long. 2.5 years is not that long. But I do look forward to how good I will be at trading at 5 years, and then so on. But you can see right here, I mean, plain as day, you see that it hit this point and it was a support area way back earlier in the year. All right, and you can see right here, right at this point, that this is a key price point that people are watching. That even down here, if you take a look now, I drew it around here, you can see that this acted as close to a resistant level previously. And so that these are key areas that people that are trading, investors as well as swing traders, are really watching. You got the day traders that come in and out, but if you don't have the investors and the swing traders that are buying huge amounts, to really back your play, then it doesn't matter. You gotta, as a day trader, this isn't a penny stock, so you're not going to find a whole bunch of day traders that are just dumping. Basically the foundation of the move is going to be based off of, I believe, investors and swing traders, and then the day traders will try to basically exploit that opportunity. And so once I hit that point, and this was, and I talked about in previous videos, that if I started breaking it, might have to start lightening up my load, and trying to manage my losses and my risk, and maybe accumulate more once I get down, buy back in my shares that I sold later on down the road. But you see that it's come back up, and now this is going to be a point of resistance. It broke through it, but just because it went right above it doesn't mean it can't pull back tomorrow and start back down and retest this. Hopefully though, it does come up and test the 180-day EMA, but only time will tell, and we'll see what happens. So like I said, keep in mind, if you're not able, depend on your strategy. That's why people ask for advice and stuff on these Facebook trading groups, and it's tough because you don't know all the intel that you need to know as far as their strategy. Are they swing trading, day trading, long-term investing? What's your account size? What are you willing, what's your risk? Like, what do you risk on a trade? What's normal to you? What's, now for me, are you diversifying your portfolio, or are you looking to dump it all into one? For me, you can see, and I'm not going to go back over it, but ultimately when it comes down to the end of the day, regardless of whatever your strategy is, you have to be able to manage your risk. And as you're able to manage your risk, then it gives you the opportunity to exploit opportunities as they arise. But the whole point in exploiting the opportunity is that you take the advantage of the opportunity, but you keep your risk as low as possible. And like I've said numerous times, people don't focus enough on risk. And you got, like I was saying earlier, you have to protect your capital. Without that, you're out of the game. You don't have any tools to make more money. Like I was talking about earlier about a carpenter and his saws and hammers and all that good stuff, that if you don't have your tools, you don't protect them, you don't lock them up, have some type of measure of security on them, then you're going to lose them, and then you're not going to have a way to make money. You're not going to have any capital to buy any stocks, to make any trades, to where you can make decent gain on. And that's, I think, the toughest thing for a new trader, is that they start with a small account and they're wanting to make $100 a day or whatever. And when you're starting with a $500 or $1,000 account, and I did a video on it, you basically have to baby that account. You have to nurse it and take low risk trades, and you have small wins, and you may have some small losses, but you're staying in the game long enough to accumulate and to get that account bigger. And as it gets bigger, then it starts to grow faster. And that's where I think a lot of new traders go wrong as well. They don't focus on managing risk. They just look at making X amount per day, and taking these high risk trades, and then they blow up their account and they're refunding it. I'm looking to add this Friday roughly 200. It may be a little bit less. We'll see. It'll probably be 200 though, but no more than that. And that's just about it. That's about all I have for today. That's Q&A Wednesday. That's another wrap on Q&A Wednesday. Channel's still slowly growing. I know it's going to take time, and I just keep posting up every day and doing my deal. And I've never done any vlogging like this or anything, so I know it can be rough at times, hearing me talk, and sometimes I'm lost for words, but I think I am improving, as well as the trading's improving. And hopefully these vlogs are helping you improve your trading. I'm by no means got the market cornered on how to trade and make tons of money, but I believe through you watching me trade as well as I review my trades and things I could have done better, that it will help you grow as a trader as well as it helps me grow as a trader. And like I said, I'm no guru. I have no problem telling you I was wrong. I didn't think, I thought this was going to happen, and it did the exact opposite. I talked about that like a week or so ago when this happened, and I thought that we were going to come back up and test it, and it did the exact opposite and tanked, and I was like blown away. Didn't see that one coming, but that's why you manage your risk. And so when things like that do happen, you have time to decide at what point, hopefully before you got into whatever trade, you've decided what you're going to do if it does this or it does that. And with that said, go ahead, shut it down. This has been a long video, and I'm going to try and get to bed early tonight so we can get up in the morning. I didn't post one up video this morning. I was so tired. It's tough. I work close to 9-hour days, and this week I'm working 7 days, and basically why I'm doing that is to build up my capital. That's what it's going to take, not just trading in order to get the account to grow, but also working extra hours to be able to add to the account and accumulate, and compound, and I think that's another thing that people go short on, is they think, oh, I just dump $1,000 in or $500 in, and then that's it. And it's going to take more than that, as well as studying and looking at the news. It will be interesting this weekend to see the G20 summit coming up, and hopefully there's some good news. And someone posted earlier today, and I'll shut up shortly after this. Someone posted up earlier today that was a really short market crash, and I just that was what I was banking on when I took these trades. Was, we'll pull up the spot really quick. Now, luckily on that TQQ, that was one of my longer terms too, because I knew it was just a matter of time, and I just didn't want to go too big at once, and so I scaled in. But I'll shut up about that trade. So basically what I was banking on was, see, back in this time earlier in the year, if you think and you look back, I think people did talk. I remember people talking about certain things, but I know that's really vague. But basically, people always talk about, oh, it looks like the market's gonna crash and this and that, and so those people that legitimately thought about that, were selling and selling and selling. And you think if you would have sat here and accumulated throughout this whole channel in this time period and just held for a few months, and they could have just been decent companies. They didn't even have to be like no Apple or anything, but just some fairly decent companies. You could have made some good money on some good swing trades, especially if you, once you hit the peak, you put a stop loss, and once it dropped a certain point, then you're back out, and you had enough discipline and patience. And that's a big key to trading, is being disciplined and patient. You're going to be gone for 3 weeks, and you can't keep an eye on the market for 3 weeks, then unless you know about hedging and know how to do it well, I would suggest just taking all your money out of the market for that time period. That way you can enjoy your 3 weeks off and not have to worry about what's going on, and be good. And so with that said, hold off, waiting for it to turn around. Once it starts to show signs of reversal, then, give it another go, and it may come back at you and you take a little loss, but ultimately in the big picture of things, you can see. So basically this is what I was banking on, that it was going to do something similar. It was showing support this area. That's why I talked about that if it broke, that I was looking at having to start scaling out, because the only other points of support were possibly way down here at the 260 area, and so I would need to try to conserve some of my capital until it started showing signs of a reversal again. And so, we see it now, we've broken through, and so hopefully it's able to hold above this area. It's broken through this resistance area. Hopefully it holds it as support and doesn't come right back underneath it and act as resistance again. But we'll see here shortly within this week. But these trades I'm holding right now, we're talking within the next month, before the end of December, that if the market goes how it does and good news comes out about G20 and all that, that we could be back in the 280s to 285 area as far as the overall market, maybe above that. And as the overall market goes up, a lot of these stocks, because they're good quality stocks, are going to go up in value too. And so, all these trades would grow my account significantly. And you think about the people that have been trading with the $500 and $1,000 account and taking these high risk trades, and they may have some big wins, but ultimately their losses outweigh their wins. And so within this past month to 2 months that I've been trading, you've seen this steadily grow. And some of these trades I'm still down in, but I'm overall up in my account. And so and I keep adding to compound, and I'm not counting that money that I'm adding as part of like being up in the account. I'm talking about when we click on here and it tells me that I'm up, and when I'm up in all these outweighs when I'm down, then I'm up overall. There was an AMD trade that I took early on that I did lose. I think it was like $30, $34, somewhere on there. Prior to accumulating all these, that I ended up just going ahead and getting out because it wasn't acting how I'd expected it to. And so it was just time to cut losses, and luckily I cut them when I did, because it would have gotten worse if I would have held. And like a week or so later, it did turn around, and if I would have held to this point, I'd probably be up in the trade, but it wasn't intended to be a long-term trade. So like I said, a lot of these trades are different than other trades. I'm not trading them all the same way. I have different trading plan for each trade. And so depending on what kind of stock it is, and if it's a commodity or not, or if it's tech, or if it's energy, or whatever category it falls in. And so we see this, hopefully it gets above the 274 and stays above it. And I'm getting back to my point. So you see the day traders I've been trading, and they started out with like $500 or $1,000, and they haven't been really adding to the account except for when they have to, because they keep losing money. And so in 2 months they would have been down now, I don't know, and I know from experience, because I've done this, and that's the only way I'm telling you this is because I've done it, that a majority of them have been down and probably have had to refund their account by now. By the time I hit 90 days that I've been with this bundle of stocks that I've been accumulating over time, I will be up a lot more. And you'll see that those that were trading with similar size accounts starting off, that they've only been adding when they've had to, and usually it's each week, or so, because they've lost X amount of money trying to day trade on Robinhood. And then on top of that, being restricted by the PDT rule, so getting in these cheap penny stocks, holding them overnight, and then them tanking, and them holding a large portion of their account in whatever penny stock it is. And so, a 2% loss in their account on a trade is a lot more than a 2% loss on one of my trades, because I'm holding small share size, so I'm able to hold and withstand the heat and not get shaken out of the trade. And so I can hold on long enough to where it starts to turn around. That's why I see, like, even with Apple having 3 shares, and it was down to I think like $1 or $172 around there, and my average is $192, so I was down like $60, a little over that at one point, but because I had small share size, and it's a good quality stock that they tend to innovate, come out with better stuff. I knew it was just a matter of time, And one of the things that I could have done better on that was I could have accumulated more when it was further down at the 170 area, 175 area. Is when I should have looked at to accumulate at least another 2 shares. And hindsight's 2020. You live and you learn, and this is how you become a better trader. There's no substitute for screen time trading a live account. You can do simulate trading, paper trading, trading, fake money, but when you can't substitute for the emotions involved, the greed, the fear, the anxiety, the impatience, the intolerance, and these are things that you gotta learn as a trader that are gonna help you become profitable. And if you can't master yourself as far as your emotions and not letting them contradict your actions, but regardless of how in fear you are of losing whatever profit you're in, and so go ahead and sell, and you're able to just sit there on your hands and let it keep running and making you more money. And it just takes time. Ultimately, it's just going to take time. If you're looking to get rich overnight, you're more likely going to get broke overnight than you will rich. Trading in the market, especially being new, it takes time, lots of time. Some people learn faster than others. They say the average trader, it takes them 18 months to get around the learning curve, and that's just the learning curve. That's not even like consistently profitable. And and the market is just always changing. That's the thing that makes it so hard. This is not the same market that it was when I started to learn how to trade. It is a lot different. And you just look at the SPY and you can see that. So with that said, I probably use that phrase a little too much, but as I get better at streaming, then I'll get more relaxed on camera and more natural. So with that said, I'm going to go ahead and just call it a night. I will see you all tomorrow. I'm going to try and stream in the morning. Hopefully I get enough sleep, and I will be up for streaming. But like a lot of times, to be honest, in the morning, I'm so tired that I'm just trying to stay focused on what's going on in the market. And once I kind of see how the market is going to play out, a lot of times I'll go lay back down for like an hour. Sometimes, if I'm really wore out, then it may be 2 hours, because it's tough going off with just like 4 to 6 hours of sleep, and then working, the hours that I work. So anyhow, this stream probably should have ended about 30 minutes ago. So y'all have a good night, and I will see y'all in the morning. Talk to y'all later. Peace.